Hello everyone, this is Alexander Nikolov. Let's look at the US stock market. This is the chart of Nasdaq 100, and as you can see here, the rally from the mid-December low remains intact, and this rally remains extremely strong. The index has already surpassed my target at 2544 level. This is a Fibonacci level calculated from a move from 2007. So this market is really strong. And what does that mean? First, let's take a look at the weekly chart. What we have here is that we have from the March 2009 low, we have a move up, followed by a sideways correction, rather deep pullback and sideways correction, another move higher. Take a notice that this move up, the second move up, was shorter, much shorter than the previous move up, and then we had another sideways consolidation in most of the last year, and since mid-December of 2011, we are heading higher in the third phase up. So I expect this third phase up to be much shorter than the previous two phases, and the most likely target right now, based on these Fibonacci levels that I have, is near 2682. If we get to 2682, I think that will be the top for this uptrend. But of course, high highs are possible, but the dangers, the risk for a serious decline will increase substantially, because I expect this move up to be corrected then for 2-3 years, probably later this year, and in 2013 at least, a sizable decline to follow. So based on this longer term view, let's put this in the context of the shorter term move up, and this move up has been very strong. This trend line remains intact basically. The market did make some kind of a top last Thursday, but so far I don't think this is the top. I think that the index will spend some days, a couple of days going sideways, and then new highs will be seen. But eventually, when a top is made, we'll have a deep correction, probably another rise to the top. So great volatility until the fall of this year, and then the index will start its next bear market. So the conclusion is enjoy current rally as long as it lasts. It's a strong rally, but the market is extremely overbought, as you can see from the daily stochastics, daily RSI indicator. The market is extremely overbought, so a sizable decline will soon follow, most likely in March or late February to early March. This decline will last 2 or 3 months. Then another rally to the tops will be seen, but that will be all for this bull market. So be selective. It's not a time to get to turn bearish. It's too early for that, but I think one should be selective in playing this trend up. This very similar picture in S&P 500, except for the fact that this index is much weaker than Nasdaq 100. As you know, S&P 500 has not made a new top above the last year's top yet, and that's kind of negative. Dow Jones Industrial has made a top, but S&P 500 hasn't. But basically we have the same structure here: a strong move up, a pullback, much shorter move up, an even deeper pullback, and now the final third phase up. That will the most logical place for this move up to top out is just above near the last year's top. So maybe if we get to 1378, that will be the ideal place for a top for this entire up move from March 2009. but my higher target, in case the index is becomes stronger and this move up persists for longer than I think now, my higher target is at 1454. But in either case, a similar picture, I expect a similar picture here as the one I discussed in Nasdaq 100. Most likely we are a flat or a triangle is developing from the December 2011 low. So we have the current move up is A wave, then sizable decline, B wave, another move up, C, D, E. So most likely we'll get some sideways trending between, let's say, 1250 and 1450 or 1400, and then a major top will be formed in later this year. So again, this market, because it's weaker, it's not so overbought. As you can see, it's overbought as measured by daily stochastics, but is weekly stochastics. But on the daily chart, it's much weaker. The daily RSI indicator already is trying to give us a warning sign, a sell signal. I still think that the index will continue higher for a couple of more weeks, and probably we'll see at least 1378 level. But from a risk-reward ratio, probably it's time to be more defensive now, because the upside is limited and the risk of a pullback is much higher. So that will do it for today. Based on the current structure and based on the VIX chart, the put-call ratio chart, the charts that I have not shown in this video, but based on this this sentiment, more kind of a sentiment information, we can expect to see slightly more. We can expect a continuation of the uptrend in the next few days, but eventually I think a top will be recorded very soon. So thanks for watching, and I'll be talking to you again later.